Good afternoon, everybody. I hope everybody is doing well. Can someone just post a note in here that you can see and hear me? That would be awesome, and then we can get started. All right. So you can hear me, which is good. And now I just have to figure out how to share my screen. And I'm frozen. So you can hear me, but I'm frozen. More robot-like. Zale, thank you. I've been working on my robot moves for years, so it's finally paying off. This is good. Okay, everything looks fine. I'm hearing. Video looks sharp on my end. You're unfrozen. Looking forward to your session. Awesome. I'm looking forward to this as well. And I'm kind of at the point now where I want to get started. So thank you for having me. Thanks for joining me. This is super exciting to be part of the Toronto Entrepreneurs Conference. I did speak last year as well, which was super exciting. Speaking more towards accounting and how to set up your business to realize extraordinary financial results. So this time, we're going to do a little bit of a different approach. Now that the world has seen a few different changes over the last 4 months, dealing with uncertainty and dealing with economic changes that are somewhat out of our control, and working towards understanding exactly what it is that we can do to put ourselves in a better position. So I am trying to share my screen and it's not letting me share my screen. So I'm going to carry on without, and you're just going to have to look at my face. So I apologize for that. But anyway, we're going to carry on and here we go. So what I want to talk about is how to survive and thrive in times of uncertainty. So what I want to talk about today is a model that we've created. It's a model essentially that's built around how to survive, how to adapt to the changing environment, how to position yourself to thrive, and also what are some of the resources that are available to entrepreneurs right now related to government subsidies and government funds. Did I cut out? Am I back? Okay, sorry about that, guys. I'm not sure what happened there. I cut out and now I'm back. So I'll just take a step back. The very first thing that we need to do when we start dealing with times of economic uncertainty is secure cash. So cash is king, and that has been a saying for many, many years. Nothing has changed. And if anything, cash is more important than ever because we can have profit right now, but if we don't have access to cash, it's harder to pay our bills, it's harder to continue to pay down our debts, and it's harder to have money available to us so that we can continue to secure and provide certainty to our family. So number one is going to be securing cash in our business. Now, I'm going to share with you a few ways why it's important, and then I'm going to give you my playbook on how to make sure that we secure more cash. So the reason it's important is when we don't have cash, I've created this concept called the downward spiral in our business. When we don't have access to cash, we become frustrated, right? So many of us, and I think the statistic is 92% of businesses manage from their bank account on a week-to-week basis, barely able to make payroll or be able to write those checks that are required for the business to continue operating. So when we're in a spot like that, our focus is going towards not having the cash resources and we get totally frustrated. And once we get frustrated, we start having this idea of uncertainty. And right now in our economic environment, we definitely are being hit with a lot of uncertainty, but for sure, what is happening is we're uncertain if there's longevity in our business. We were already tight. Now we're uncertain about our future. And what happens when we get uncertain is we start panicking and making desperate choices. Now, when I'm talking about desperate choices, I'm meaning that, when it comes to cash, what we're doing is we're going and we're securing loans that are at high interest. Maybe we're using credit cards that are, again, spending high interest rates right now that, once you get in that hole, it's really difficult to get out of. And ultimately, failure could be a result. And now I'm on the board for an economic recovery team in our province. And what I can tell you is that the surveys that are coming out are sharing that approximately 30% of businesses aren't going to survive this economic downturn. And why am I saying that to you? Well, 82% of businesses that don't survive is because they don't have the cash resources necessary. So here's the thing. Anybody who's watching here today, we're going to share with you the exact cash resource tips that you need in order to survive COVID-19, and not only survive, but position ourselves to thrive. So the very first thing, I've got 8 areas of cash flow action management that we can take and we can implement in our business today. So I'm going to start with the very first one. The very first one is cash collection and acceptance. So many business owners I see out there are, restricting ways that their clients are able to pay them. They're only accepting checks or e-transfers. They're not accepting credit card payments, American Express specifically, PayPal, online banking payments. So what we need to do is step one, especially at a time like this, if we've got accounts receivable that are out there, or as a barrier to working with us, we want to eliminate all barriers and ensure that we've created an opportunity for our clients to pay in any way, shape, or form that they can. Now, the one question that comes up often related to this is, what's the cost related to these sorts of things? Now, American Express is expensive. It's 3% or 3.5%. Credit card charges, depending on the type of credit card, can be very expensive as well. So, we do have to take that into account. But here's what I do know is that 97% of cash in our bank is better than paying a 3% fee, right? I would rather pay that 3% and have 97% than have 0%. And now, not only does this reduce the barriers for your clients to pay you now, but it also reduces the barrier for new clients to work with us and to get started. So rule number one, let's make sure that we're providing every opportunity for our clients to pay us as they possibly can. The second step for surviving right now, which again is focused on cash resources, is making sure that we're aggressive on our accounts receivable management and going out and actively collecting receivables. Now, what I can say is that a lot of our clients are in a spot where they're out actively trying to collect their receivables, and people are reaching out to them saying, can we create payment plans? And, the answer is likely going to be yes. If I can guarantee, if someone owes me $1,000, if I can guarantee that they're going to pay me over the next 2 months, I will take that payment plan. I will set it up automatically so that it happens, without having to think about it. I appreciate the fact that somebody has proactively reached out to me, and I've got certainty related to the fact that I'm going to get cash resources into my business. Now I can start planning for that cash flow that's going to be coming in. So again, right now is a really good opportunity to aggressively go out and actively collect those receivables. The exact opposite is accounts payable management, and I'm going to talk a little bit about this later, but accounts payable management, in essence, and this is probably the area I'm worst at, is avoiding putting the cash outflow very quickly in our business. So if you're anything like me, you get a bill in, and I don't want to have to worry about it or forget to pay it. So as soon as a bill comes in, I pay it out immediately. Now, that's a terrible accounts payable management philosophy and approach, because right now what we should be doing is taking in our accounts payable and seeing how we can push those payments out to a later date. What happens is when we're able to push those cash payments out to a later date, we're actually able to maintain our cash resources in our bank account and maybe even accumulate a bit of a stockpile in there for, a bit of a rainy day. So as our accounts payable continue to go, we do have to continue to pay them, but it's just a matter of stretching them out so that we can get our cash resources in so that we can feel security around what our cash balance looks like. And again, just like I said with accounts receivable, accounts payable management, if you're proactively reaching out to your vendors and you're making arrangements for them and saying, can I make this payment over 3 months, or I'm going to pay this by 45 days. That gives them certainty, and they're worried about the other people, not about you. They're going to likely be very open to the fact that you're suggesting a payment option because now they've got certainty over accepting your payment. So that's super important. That was number 3. Number 4 is looking at our non-essential expenses and eliminating them. So what I like to do when I review non-essential expenses or review expenses altogether is I pull up a profit and loss inside my business, and I would look at it on a monthly basis. And on that monthly basis, I can see, dues and subscriptions, bank charges, any of my fixed expenses that I'm looking at going, do I really need to spend that money? And I'll give you a really good example, one that I haven't taken to heart myself, but we all have lots of little software solutions, whether it's a CRM platform, an invoicing system, or whatever it is that you need, right? Different communication tools, whatever it is. Now, what happens is we start finding these new tools and we really like them, and the innovation is amazing. New tools come out that are better and better and better. But have we actually canceled the subscription to the previous software solutions or applications that we used at the beginning? So one example for me is I use ActiveCampaign for my CRM platform, but I also still have an Infusionsoft or a Keep account. So one thing I can tell you right now is that I should be eliminating one of those items. I should be merging them all together because it is a few $100s a month. Now, if we can all go through and eliminate a few $100s a month in our business, it's going to be a really important step towards maximizing our cash. So that was number 4. Number 5 is moving our payments up. What that means is, and this is how I like to refer to it, is a lot of businesses, they offer a service or a product and they get paid upon delivery. Now, moving the payments up means taking that transaction and taking cash prior to that transaction being delivered. And in fact, if we think of it, for my business, for example, doing tax returns, we charge at the end. When we finish a tax return, we charge our clients and they pay us at that point. But what we should do is maybe before we start, we should take a payment. It should be a fixed payment. And before we even start doing any of the work, getting the cash resources up front. And second, if we can move it even a step further and say, before we even start working together and before you're even thinking of dropping something off, I should get a deposit up front. So moving the payment from the end of the transaction all the way to the front. And what that will do is it will stockpile our cash up front. We'll have the available resources in our business to be able to properly plan out what our cash outflow and expenses look like. So that is number 5. Number 6, which I feel is one of the most important, is looking at and utilizing financing. So payables are a financing. We talked about that, accounts payable management, moving some of those payments back. But one thing that I see in entrepreneurial businesses all the time is that as we're continuing to try and grow and reinvest in our business, we're taking all the cash resources out of our bank account and we're buying new assets, whether it's vehicles, equipment, furniture, and fixtures. And we're doing that because we can, and we don't really like debt, and we would rather use all of our operating cash towards reinvesting in those areas. Now, what happens is we take our operating cash flow and we start putting that towards, our business expansion and investing in our business, and COVID happens. Business slows down. All of a sudden, our cash resources are shrunk. And instead of going out and getting financing, we've spent all of our cash and all of our available cash on these assets. So 2 options at this point. One is going forward, let's make sure that we're using the bank's money to finance those assets. Let's keep the operating cash flow. Let's use that cash to pay off the payments, but let's keep that cash in our business for these rainy days and for investment in other ways like marketing. Secondly, if we've already spent money on equipment and assets, maybe now is a really good time to go to the bank and actively request financing related to those assets. So if we can pull up receipts and we can provide those to the bank is being extremely flexible right now in financing equipment, furniture, and fixtures in our business. So let's reach out proactively. Let's get some financing. What that'll do is it will stockpile some more cash flow in our business to give us a little bit more certainty so that we can focus on strategic initiatives as opposed to just surviving. Number 7 would be liquidating old inventory. So if you have a business where you're buying and selling items and some have been sitting on the shelf for a little while, maybe they're not as marketable to your clients anymore, or if you've got any sort of non-essential assets in your business, construction industry slowed down a little bit as some of the permits were being held, and if the job wasn't started, things slowed down. A lot of people had extra vehicles, or if you're in a business that you have extra equipment because maybe your business model has changed, or now that everybody's going online, maybe there's a different change in your business in that way. If you've got assets, equipment, furniture, fixtures, inventory that maybe we look at liquidating, whether it's inventory that we aren't going to be able to sell, let's discount it and get it out. What that does is it gives us access to the cash flow related to selling off those resources. So that was my tips on how to secure cash. Again, cash is making sure that we survive. 82% of businesses fail because they don't have cash resources or adequate cash resources. This is a way, if you implement 1, 2, 3, 7, 8 of those ideas, you will be in a really good, secure position to make sure that we can adapt to the next step in our business. Now, one thing I will say is the second step of our survive and thrive model is the adaptation. Now, why adapt? Well, because our businesses are drastically changing. And I'll give you an example. In so many businesses, we have wages and purchases that we're buying something and we're selling it, or we have a service and there's cost of wages and maybe purchases that, the cost of those is to deliver those products or services. What happens though is, a really good example is wages. Let's say, we have $500,000 in income in our business. We have $100,000 in wages. That would be 20% cost of sales is our wages. What happens is if our revenue drops down to 300 because the economy has kind of changed or our business model has kind of changed, if we don't quickly adapt to adjusting those payroll costs or adjusting some of those other fixed expenses down, then we could be in a spot very quickly that our business could be in a loss position, and not only in a loss position, but could be draining all of our cash resources. So what we need to do is we need to be very cautious and very on top of our finances right now and understanding what we can do, what expenses we can cut to make sure we get lean and mean to adapt to the new market. Now, one thing I will say, and I'm going to talk about the government subsidies in a few minutes that are available, but one thing that we certainly know that the government has provided is rebates related to commercial property rent, which is still kind of out and to be determined, and then the wage subsidy. So if your business is suffering a loss in revenue, those two are typically the biggest fixed expenses in your business. Fixed meaning that we can't easily eliminate them unless we're laying people off or we're getting out of our existing lease. So the government has come in and provided support in those areas. So I will talk about that in a few minutes. But when we're talking about adapting, what we need to track is our finances. And one thing that I am a heavy advocate for is having a dashboard that's available so that we can constantly see what's going on inside our business. Now, what I want to share with you is some of the key numbers that you should be tracking as we're going through this adaptation to our new business model. So the very first one that we need to be tracking is revenue. Revenue is obviously the biggest driver. If you're in a business right now where your revenue has shrunk, we need to quickly adapt and adjust some of those expenses of delivery for that revenue. So again, those wages, those purchases, whatever costs that we incur directly related to that revenue, we need to adjust those fairly quickly. So the second piece, second number that we should be looking at is gross profit. So gross profit is our revenue minus our cost of delivery gives us a total profit. We need to make sure that this is a positive number, right? We can't be going out and delivering revenue that's costing us more to deliver it than what we're actually bringing in. So if that's the case, we need to stop delivering that revenue and we need to eliminate those expenses very quickly. Because if we have a gross deficiency on the revenue we're generating, that's going to very quickly put us in some trouble. Now, here's the good news. If our gross profit is becoming negative, but we're going to qualify for the wage subsidy. And the biggest number inside of generating gross profit for us is wages. Now, if our profit's dropping and we can get a 75% wage subsidy reimbursement for our profit, that may put us back in a positive position. And you might be in a business where you're thinking, delivering that revenue to our customers is still important so that we can maintain those relationships going into the future. Just know that as this is going on, you are going to have to fund the cash flow for your wages in order to get through that period. So again, back to step one, get access to cash, whether it's financing or getting lines of credit, whatever it is that you need to do to get access to that cash, that will help you survive through this period. And the last one, aside from cash flow, because we did talk about cash flow is king. The last one that we need to look at is our bottom line income. So although the economy has changed and it's had a negative impact on almost every business, right? Unless this is an economy that's allowing you to thrive, it has almost impacted every other business in one way, shape, or form. So net income is going to be a very important number. So some of us who are sitting in a spot like we are right now with COVID-19 shut down, or we're having to work remotely, or business is not as usual, we have come into a point where our net income has decreased. What we want to make sure of, though, is that we mitigate any sort of loss and we maximize any income that we can generate. Because here's the thing, if we get all these cash resources available to us, but then we're generating these massive losses in our business, that's going to eat away at those cash resources really, really quickly. So again, surviving is getting the cash. Adapting is not losing that cash or not giving it away, mitigating any sort of losses, looking at our key financial numbers to make sure that our business isn't going to struggle and give away all the cash that we've created access to. So those are the key numbers to understand and how we need to monitor the adaptation from where we were to where we are now and how we mitigate any sort of risk factor. And then here's the good news, guys. We are now, once we're through this, once we have cash resources, we now have a new business model. A lot of us have identified that maybe there's been inefficiencies, maybe there's been redundancies in function in our business, and now we're reviewing these items, we're eliminating non-essential expenses, and we're getting real lean and mean. Now we get back into more of a normal reality. The doors are opening back up. This is going to be an opportunity for us to adapt our new model and get ready to have probably the greatest economic opportunity we've ever had. Why do I say that? Well, like I just said, 30% of businesses are expected to not survive through COVID-19. That's a lot of businesses. Now, when we think of those businesses, it might be some that can no longer deliver a service because the economic environment has changed. It could be a lot of people who are getting ready for retirement and just going, you know what, I'm just going to shut it down now because I don't want to struggle and have to fight back through like we had for so many years. So there's a lot of businesses where, maybe they're your competitors and they're closing their doors. If you have the cash resources and you're ready to take advantage of the opportunity of this economic climate, there's going to be a lot of business that is going to be coming out of this in the next month or 2 months. Anyone who's been at home, social distancing, not spending, like if they weren't spending online, getting the renovation done, buying the product or service that they needed at their house, those people are still wanting to buy. And let me share with you this little insight as well. The majority of our economy, whether it's government employees, teachers, retirement, people who are on fixed pension, those people haven't had a dramatic shift in their economic situation, right? They've still got paychecks, regular checks coming in. Their finances are actually probably in a better spot than they ever have been because the money is coming in and they aren't able to spend it. Those people still have the same demands for products and services as they did, but now they're coming out of COVID and they want to get it done. So our new vision, our new model, we should be ready to actively take advantage of the opportunity of our economic climate because there will be more business than we've ever seen before. At the same time, when we're looking at this right now, we should be planning it out. We should be budgeting. We should be looking at forecasting and building out a map of what the next 6, 8, 12 months looks like in our business. How much demand are we going to have? What are our sales going to be like? What is our new cost structure? And how does that turn into profitability inside our business? Again, profit is the most important thing in your business aside from cash flow, but we need profit. And a lot of people would argue that profit isn't important, impact is. But let me tell you this, the more profit you have, the more you can grow, the greater you can impact more lives. So profit is certainly very important. And now, once it's been benchmarked, we've got our new model in place. We've got our map to get us from Toronto to New York City. We see all the turns and all the streets we need to take. Now's the time to completely execute and thrive in this economy. So hopefully that was super helpful. That was my survive, adapt, thrive model. What I'm going to talk to you about now quickly in the next 3 minutes is I'm going to talk to you about what resources are available. So there are a bunch of them. I've got 13 on the list. We're going to go through them quickly. First off is the Canadian wage subsidy. This is a 10% wage subsidy that allows up to $25,000 rebate per employer and $1,375 per employee per month for a 3-month period. Now, this was later they implemented a 75% wage subsidy, which is called the Canadian Emergency Wage Subsidy, but the 10% subsidy still exists. So if you're in business and you've got payroll, but maybe your business hasn't dropped, you are still eligible for that 10% wage subsidy. Let's talk about the Canadian Emergency Wage Subsidy, which is called CEWS. 75% of payroll will be reimbursed to you if you can justify that your business dropped 15% in revenue for March and 30% any month following. Now, they just extended it that this resource is going to be available until August 29th. So that's very exciting for anybody who's seen an economic downturn in their business. This subsidy is capped at $847 per employee per week, but again, will provide a full 75% rebate on that if you can justify that decrease in your revenue. The next item is the Canadian Emergency Bank Account. This is the $40,000 interest-free government-backed loan called the CEBA that the government issued. They just recently changed some of the rules. Typically, when we first started, it was $50,000 of payroll had to be in place. They dropped it to 20, and now I understand it's going to be dropped even further. So anyone who hasn't been paying attention to this, I've got a Facebook group called Vision to Results for entrepreneurs. Look us up. I'm providing all the insights on a daily basis as soon as they come available. The CEBA, if you felt like you didn't qualify before, relook at it because there's new rules and they're trying to make it so that everybody can apply for this. So what the good news is with this, 30,000 of it's repayable by December 31st, 2022. If you repay 30 by then, again, 0% interest till then, $10,000 is going to be forgiven, completely forgiven. So they're going to give you 40 and you're going to repay 30. If you're eligible for it, why wouldn't you go for it, right? It's a free $10,000. So super important to do that. It can only be used for operating expenses that can't be deferred. So just look at your business. If you have no expenses in your business, maybe it's not the best situation to put yourself in, but that is a super important one that everyone should get access to. Most recently, the Canadian Emergency Commercial Rent Assistance Program. I'm not going to dive into it too much because the final details haven't been released. But if your business is down 70% in revenue, you can talk to your landlord about applying for a rebate. Now, what they have to do is they have to implement a 75% reduction in your rent, and they would get a 50% rebate on the overall rent back in their pocket. So something to be aware of and to try and implement in your business. The next one, Canadian Emergency Response Benefit. This is the CERB. This is for EI for the self-employed and others who wouldn't otherwise qualify, up to $2,000 per month for up to 4 months. That may or may not get extended. You have to be out of work related to COVID in order to qualify, and you have to have income under $1,000 a month, again, to qualify. There's a whole bunch of questions related to this. Again, join my Facebook group. We're actively trying to answer all of those. Super important. They introduced recently another program called the Canadian Emergency Student Benefit. That is $1,250 per month, up to 4 months for students who are out of work. Super important that we have access to these resources for our students. Make sure that if you have a student, that application has now become available. Another one, BDC has been given $10 billion in working capital financing for entrepreneurs. If you haven't applied for it, you have to be a business that's been in existence for 2 years, and you have to have strong financials, and your financials have to be up to date. But if you can justify that you can repay a loan, they will give you the money. There's an online application at bdc.ca that you can jump into. You can apply online for up to $100,000 in working capital. So we're talking about surviving. That's a really good resource to get access to those cash. Other items, personal and business loans. If you haven't asked for deferrals on those, please reach out and ask. Essentially, what we want to do is defer cash going out. So reach out to your banks, whether it's for your personal mortgage or your bank loans, and defer those payments. Student loans have no interest, no payments. Income tax filing deadline is now May 31st instead of April 30th, but any payments owing after March 18th for either corporate taxes or personal taxes are now due August 31st instead of when they usually would be due. For personal was normally April 30th. And the last item, deferral of HST. HST filings are still due on time, but any payments related to that has been deferred to June 30th. I know I'm a few minutes over. Hopefully that was super valuable. I tried to cram a whole bunch in, guys. Thank you so much, and I hope you guys have an awesome day and enjoy the rest of the conference. And what I'll do here, I'm not sure exactly what happens if everyone's going back to the main stage, but if anybody wants to hang out here and ask questions, I will hang out and answer any of the questions verbally that I can see coming through. So if you want to shoot questions, until they kick me out, I'll stay here and hang out with you guys and answer, any of the specific questions that you have. What I can do, I can see Hannah from my team is on here. Hannah, can you actually grab a couple links for me? One, the download of our book, and one, the link to join our Facebook group, because I feel like that would be super valuable for anybody who's interested in getting more answers related to this. We're in there every day answering all the questions and providing all of the resources that we possibly can. Question here from Shireen Clark. What would you recommend as a good app, platform, or resource to properly keep our business finances in order? Shireen, my favorite app for using for businesses is QuickBooks Online. The reason I like QuickBooks Online is a few things. One, it's somewhat automated. So if you use QuickBooks Online, you can tie in your bank feed to the QuickBooks, and it allows you to keep everything up to date. It essentially gives you a list and says, here are 10 things you have to do today, which is just allocating expenses. Now, that's the back end side, and that's the tracking. The other really good thing about QuickBooks Online is there's actually a budgeting function inside there. So especially right now, if you're looking at it, you can go in and put your expected sales and expected expenses in there, and it will track it. So what we want to do, and a lot of times we look at this as a goal setting opportunity, going in there and setting up all of your goals in your budget. Do you want to hit $1 million in revenue this year? Do you want to hit 2 million? Whatever it is, we benchmark it all out in our little map that I call the budgets, and then we put in those results. And on a monthly basis, we compare what we actually did to what our expectation was and what our budgeted figures were. So I love that feature in QuickBooks. I think that allows us to stay on track. And also with QuickBooks Online, because of some of the automation, I love that it keeps us up to date, because there's nothing worse than reviewing finances that are a year old. We need to know what's going on in our business right now. Okay, I see Hannah has dropped in our link for our Facebook group. Anybody who wants to jump in there, it's free. There's no sales pitch. It's just completely a value add opportunity. We just want to try and help as many entrepreneurs as we can, because listen, there's a 30% chance of business failure. I want anyone who works with me to have that to be 0%. So if there's anything I can do, I want to make sure that we all survive, adapt, and position to thrive in what, again, I know is going to be one of the greatest opportunities that we're all going to have as an entrepreneur. Shireen, again, my new favorite. What are the biggest mistakes you see entrepreneurs making with their finances? So one of the biggest mistakes I would see is that they aren't keeping up-to-date records in their business, right? A lot of entrepreneurs, and with no fault, right? Nobody teaches us how to run a business. Even when you go to business school, or you've gone for a specialized skill, nobody's teaching us how to actually operate a business. And we all understand, profit is we sell something and it costs us less than what it was to actually deliver on it, right? We understand profit, but when we start scaling up a business and we start doing more and more work, we can't manage our business from our bank account. And a lot of entrepreneurs and small businesses are looking at their bank account saying, oh, well, it was a good week. I made a lot of money because we got cash in. Now, that could be true, but it's also very likely that it's not true, right? You might have made money months and months before, and now you've just collected payment on it. And maybe you're losing money now, but all of a sudden you're collecting more cash. So we need to be looking at those two areas, profitability and cash flow, and making sure that we're on the right path for both of them. So I'll tell you a little bit about a program that we have. We have a program that's called a virtual CFO, and it's a one-on-one program. And what we do is we meet with our clients on a monthly basis. We've got a dashboard for them that shows exactly what the score is in their business. It shows them their monthly profitability and it shows them their monthly cash flow. And we either do this on a one-on-one basis or we have it in a group setting, which is more economical so that we can help more people. But it gets you access to that dashboard. And I feel like if you don't have transparency and you don't know the score of the game in your business, how do you know if you're winning or losing? How do you know if you're achieving the goals that you set for yourself in your business? Super important to make sure that you keep track of that. And I guarantee you, if you're looking at it, you can understand what's happening that's either working well or that's not working well and modify your execution accordingly. So hopefully that's super helpful. Another thing, I was actually just on Good Morning Texas this morning talking to people about personal finances. And I think that a lot of those tools, relate to businesses as well. One of the tools that I suggest is there's a study called the psychology of spending, or a terminology called the psychology of spending, which says if you have money in your bank account, you think it's available to you to spend. So for individuals, heading into COVID, might have had money, might have spent it, income might have dropped. Oh my goodness, we ran out of cash flow inside, our personal lives. Same goes for your business. What I recommend is that we get that money. If there's any surplus funds in your business bank account or your personal, we get it out of there so that you're not looking at it. Because if you don't have it available to you to spend, then you won't spend it or you can't spend it. So one thing that we recommend is setting up automatic transfers from your business account or your personal account into an investment account. Start out at $10 a week, $50 a week. If you put in $100 a week, that would max out your tax-free savings account contributions. If you're able to get it up to $1,000 a week, $2,000 a week, if the cash flow is in your business available, get it out of there. And not only are you not going to spend it, but you can get it actually working for you and starting to create an income from some of those investments that you're making. So super important from a wealth accumulation standpoint. Let's set up automated ways that we can start building wealth in our lives. Because truthfully, the end goal of all of this is we know how much we want to make per year. Our end goal would be to create a secondary source of income, like our pool of investments, whether we put it in real estate or in stocks and bonds or whatever, that we have that secondary pool of income that's going to provide us a secondary source of income. Now, when we can provide a secondary source of income that earns as much as what we need right now, that is financial freedom, right? It's working on its own without you to create financial resources and financial income that will support you for the rest of your life. So financial freedom is super cool. Let's all work towards that. Mohammed, how the situation can provide and opportunities for entrepreneurs to start a business. What industry do you recommend to look at? Mohammed, great question. I think there's a whole bunch of them. Interestingly enough, I feel like a lot of the old school markets that couldn't pivot to get onto online would be a really great opportunity. So if you're a tech savvy person, to take an old school business model, like an old school retail or something like that, and getting it online or competing with those people who you know can't, is super interesting right now and is super entrepreneurial. So that's cool. Software is obviously a super interesting spot. You know, we're not on Zoom today, but so many people have invested in Zoom and other online platforms as communication tools. So those are super interesting. Any sort of healthcare or chemical companies or research companies, you know, those are really good areas of investment opportunity. But if you're looking at starting up something as an entrepreneur right now, what I would look at is I would look at an industry that's traditionally been more brick and mortar, has been more labor intensive. Looking at that, like accounting, for example, you know, accounting firms are brick and mortar. Everybody's in one space. You know, we're all working collaboratively together. And something like COVID happens, more and more businesses need more and more services. But those CPA firms that can jump in and pivot and become virtual are going to be more successful. And if they can do it without requiring any staff, with use of automation, would be super helpful. So that would be a great idea there. Laura says hiring a virtual CFO was the best decision I made in my business. Absolutely. You know, what we work towards with our clients is making sure that they're achieving their dreams. And what we do is we set up a map that allows them to see exactly how to get there. So it gives you monthly actionable items that all you have to do is hit these targets and you will fall in line with achieving your goals. So that's super cool. Where did you find a virtual CFO? Shireen, I can help you out. Make sure that you hook up with us. You know, again, we've got a bunch of different options. So just a little bit about me. I didn't really share it before because I wanted to get right into the info. I'm a CPA. We have 20 plus CPAs, tax advisors, bookkeepers, and business coaches in here. And we've created proactive solutions to help people grow their business actively. So one of the reasons I did that is Tony Robbins actually recruited us a few years back, and we hung around with Tony for 3 years, traveling and working with him at his business mastery events. We were a partner, his Canadian partner, the only Canadian partner in his Tony Robbins Global Accounting Advisors group, which was super interesting. And based on that, we learned a whole bunch about Tony and some of the value that he's trying to contribute to the entrepreneurial life. And we've built out programs to essentially mimic some of Tony's philosophies, but taken it a step further, really understood what our financial expertise can do to help people. And then we built programs around it so that we can help as many people as possible. So that was what we created. We're just outside Toronto, but we have the ability to be fully virtual as a business, which is great. And you know, we're likely going to be recognized as one of the fastest growing companies in the country this year, which is very exciting for us. If not, maybe the fastest growing CPA firm in the country. So it's super exciting. You know, we practice what we preach. We're growing. We're reinvesting, primarily because we want to continue to have a positive impact. And let me tell you why impact is so important to me, because people like you guys, entrepreneurs who are out there, are coming up with ideas and solutions that are life-changing for so many people. And, you know, it's a real honor and privilege for someone like me to help people like you realize your dreams while you're helping and impacting so many people. I feel like through me, I can multiply the impact that we have together. And that's super inspiring to me. So anyway, thank you guys so much. I'm going to bail out of here. I wish you all well. If you want to reach out to me, our firm name is Gauvreau CPA, which is GAUVREAU CPA.ca. You've got the link in the chat for our Facebook group. By all means, join us there. Happy to offer any free value I can and insights. Again, you know, wishing you all the best. Let's make sure we're surviving, capturing our cash resources, adapting to the changing economy, adapting to the changing market, getting lean and mean, and positioning ourselves with cash resources available to really take advantage of the opportunity in our economic climate going forward. Thank you. I wish you guys all well, and I hope you enjoy your day at the Toronto Entrepreneurs Conference.